Success is achieved and maintained by those who try and keep trying. W. Clement Stone. My friends, the key to success in what we do here every day is to spend 10 to 15 minutes with us charting these markets, filling out your trade worksheets. When you do practice trades, your daily market worksheet. And of course, for today, since it's Friday and the market just closed, it is the weekly market worksheet. I'm going to put all three of those worksheets, how to fill them out at the end of today's video. Very, very important to supercharge your training. Let's jump into these charts. I'm looking at all red, friends. Everything down on this Friday. Let's first jump into the S&P 500. How did we end up this week? Well, check it out. Price percent oscillators pulling away from the red signal line. We have a red down candle, a red spinning top, almost a doji. And you see that 2-day recross going down. On the weekly chart, just before I leave there, price percent oscillators putting away from the red signal line, derivative oscillator, positive losing momentum. Look at the 2-day. We had that 2-day recross on Thursday, accelerating down on Friday, down 0.77%. Look how quickly and decisively the derivative oscillator plumbed down, and red down candle forming this first day of the latest 2-day candle. It will finish drawing at the close of the market on Monday, but things headed decidedly down on the 2-day. Look at this half-day chart. You can see where things, let's go ahead, and we should have reset this way before now. We'll go ahead and reset our half-day trend line as best we can. There we go. And again, we see the price percent oscillator clicking over, going down, derivative oscillator gaining downward momentum. So far, 1 day into this 2-day recross going down, not bad, down 0.77%. Okay, that's where we are on the S&P. Let's go to the Qs. The Qs is still positive on the weekly chart. It's been positive for quite a while, but barely. Price percent oscillator less than flat, derivative oscillator green losing momentum. 2-day chart trying to cross over. We'll see if that happens. If that does, of course, that's the end for us in any up movement. We would wait for either the weekly after that to cross over going down, or there to be a 2-day recross going back up. We'll see how this wraps up on Monday afternoon when the 2-day candle finishes drawing. Just remember, you never have a candle until the time period ends. If it's a 2-day chart, when the market closes at the end of 2 days, that's when the candle is real. Same with the weekly. You can sure look at it during that interim period, but it doesn't count until it closes. So what do we see on the half day? We can see that not a lot of down movement in the morning, well, going back and forth, but really hammering down in the afternoon on Friday. We can see these precipitous drop in the price percent oscillator, acceleration of the down move in the derivative oscillator. So that's where we are. See how this market starts up on Monday when it comes to stocks. It ended the week with a down move, and you know, those of you who pay attention and take the trainings that we offer, we have a really good one. I will put it out, I think what I'm going to do is, instead of putting the training in on filling out the daily market worksheet, I'm going to skip that. I'm going to put in the weekly market worksheet, how to fill that out, the trade worksheet. I'm going to put in the training on the Monday effect. Just in short, studying the market, if you watch what happens on Friday, that tends to get digested over the weekend and continue in that same direction on Monday mornings more often than not. And I will put that training in for you guys to take. It'll be at the end of today's video. So let's keep going through these charts. Going to next go to 20-year bonds down 0.88% for the day. And again, bonds are still positive as far as the price percent oscillator and the derivative oscillator goes. Both of them are heading down. The price percent oscillator, not to the same extent that the derivative oscillator is, but it is less than flat. Red spinning top for the week, solid red, so a little bit up movement, mostly down movement. And still positive, though, as far as the price percent oscillator goes. So we'll continue to watch. 2-day has been negative for quite a while, heading down since that 2-day crossover, not a recross, but a crossover in the opposite direction of the weekly, going down back on the 6th of October. That went down for 6 days, popped up 6 days, slid sideways, and tending down for several days since then. Price percent oscillator still heading down. Derivative oscillator is about flat first day in this latest 2-day candle. What do we see on the half day? We saw where things really bumped up over a 2-day period, Wednesday and Thursday, and then on Friday, sort of devolving. So we'll continue to watch and see how bonds sort themselves out. 2-day down, weekly up. We'll see what bonds are gonna do as we jump into this new week. Let's jump into gold. Disappointing, my friends. Down for the day, 0.5%. It carved off. It was down more than that toward the end of the day and rebounded a little bit. Check out the weekly. Laminated. Price percent oscillator and the red signal line, both negative 25. After that strong crossover going up and just dying on the vine. Somebody strangled the baby in the crib and boom, just pushed right through the weekly trend line. Derivative oscillator still holding on. Price percent oscillator hasn't gone negative yet, but weak. And look how weird this is. The 2-day is still positive. It didn't lead the charge down, not enough to cross it over, and the weekly's just sitting there poised to roll over going down while the 2-day is still positive. Crazy. Just crazy. I was hoping gold is just going to take. And again, we'll wait, watch, and see. We don't have the 2-day kicking us out yet. Now, you may have kicked yourself out based upon what you set your profit and loss bands at, particularly the loss bands. But pay attention if you have not hit those mandatory outs. Watch how this next week develops. What's happening on the half day? You can see where things right after booming up on Friday. Monday started off decidedly down. Tuesday continued. Then what happened on Wednesday, trying to gain a little traction, and then Friday morning started losing it on into Friday afternoon. That price percent oscillator on that half-day chart still hammering down. Derivative oscillator losing a little bit of that downward momentum. So we'll see what happens with gold as we jump into the new week. Lastly, we get into Bitcoin. The New York Stock Exchange Bitcoin Index down for the day 3.85%. We've seen where Bitcoin has been bounding up. We ended the week with a flat price percent oscillator, derivative oscillator positive, but losing momentum. Red open box spinning top is what we got for the end of the week. Now, we've seen that happen before in the last run-up where things bounded up and then bled off, down for 2 weeks, sort of sideways and down a little bit, and then taking off again, doing the same kind of thing until it finally lost it, devolved, and diminished, crossed over going down. So we'll watch and see. Now here, though, is our real problem. You look at the 2-day chart, and what do you see happening? Well, the 2-day is trying to cross over going down. Very important for you to see how that finishes up on Monday with any decision on staying into Bitcoin. As the 2-day has weakened significantly, that would be a 2-day crossover going in the opposite direction, which of course under our rules would pull you out until there is a 2-day recross going back up or that weekly crosses over going down and you short if there's an ability to short Bitcoin. Of course, the whole reason apparently the New York Stock Exchange started this Bitcoin index is the hopeful development of a derivatives market, which hasn't happened yet, which as Bitcoin matures, one would think would happen at some point. The derivative oscillator has also gone negative on the 2-day. We look at the half-day, and that's where we see, again, Bitcoin booming up and then rolling over hard down. That is where we are, folks, as we end the week. Appreciate all the Patreon support over the course of this last week. We do have some Patreon spots available Hope you Patreon members made great use of those 20 weekly vertical crossovers, as I recall. 7 up, 13 down. Hope you found some good potential trades to practice trade. And of course, how did MO do for the week? That was the little one we gave you. Again, up for the day a little bit. We had that weekly vertical crossover. I'm going to do something. Can I do it? I'm not really sure. Let's give it a shot. If I can do this on the fly, go from the Heikin Ashi candlestick to the regular candlestick. The reason I'm doing this is it'll allow me to see more accurately where Bitcoin ended last week. The close 50, not Bitcoin, MO last week, 50.97. The high during the week, 51.08. So again, not a lot overall as far as where MO moved to, but the good news is it did continue to climb upward. Going to convert back over. This is something for you guys just to be aware of when you are dealing with the Heikin Ashi candlesticks and trying to get a feel for how successful one of your practice trades was if you're not using TC2000 and the paper trading. Heikin Ashi does not give you an accurate closing number. Why? Because unlike the open, high, low, close of a typical candlestick, Heikin Ashi is measured differently. We have a great training on that. Folks, that's where we are as we end the day. God bless you all. Hope you have a great weekend. I'm excited about this next week, of course, as we move into the fall-winter trading zone, out of the summertime trading zone, as things hopefully heat up and it gets beautiful. One way or the other, up or down, we just want strong movement because that's when the charts really work. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.